There's a lot of volatility in the global oil market. We see prices are down this morning. Let's talk to Victoria Momo, analyst, financial derivatives company. Great to have you on the show, Victoria.
Thank you for having me, Laddie. Good morning.
Yeah, so we're seeing prices down. They seem to be losing that $90 level. What's driving sentiment in the market today? Any support levels for oil prices in the near future?
Thank you very much for the question. So I'll start by saying that, oil prices have, dropped below $90 per barrel. And one of the reasons for this is actually the strong US dollars, which has triggered which has triggered people or investors to actually take advantage of the profits of higher oil prices. Before now, oil prices were above $100 per barrel, and these investors actually took advantage of the high price and strong US dollar. So they were able to actually sell off this to take advantage of the profits, and this supported the decline in Brent prices. And don't forget that there are also concerns about the interest rate hike by the US Fed, which has been affecting the demand for oil, and that is also weighing on the price of oil. And then there is also the aspect of some other countries, major countries like the Eurozone, Germany, and even in China, where recovery is actually slower than expected. So this is actually, weighing on the price of oil, and has actually brought the price of oil below the $90 per barrel. I mean, what this means for Nigeria is that we could see, a decline in our foreign exchange, in our earnings from oil. And on the plus side, we could actually see a reduction in the cost of importation, because again, oil prices are falling or have fallen down to below $90 per barrel. So this could actually reduce the cost of importation, and in turn the money that will be spent on subsidy payments.
Now, when I saw Brent and WTI prices hitting highs in the short term, I was expecting natural gas will also pick up steam, but it seems like it's finding it hard to rise above that $3 level.
So basically, we would see that these oil prices could eventually still, go back on track. And that is because we still have the aspect of tight supplies from Russia. Don't forget that there are oil production cuts. OPEC has meeting on Wednesday. So we could still see an increase in the price of this commodity in the near term. And also for LNG, we also noticed that the prices also increased, and that is because there are robust supplies from countries like Norway, even in Australia, where the prices of the strike has been called off and production has returned. So we've seen improved production of LNG, and this also has weighed on the LNG prices.
Happening with international grains at this time?
Well, so international grains, we'll start by talking about the wheat prices, and that is because we are seeing bargain hunting activities, and before now, wheat prices actually were declining due to ample supplies from Russia, and then we've seen investors, taking advantage of the lower prices from wheat, and this also, increased the demand for wheat and also pushed the price of the commodity higher, and this basically, the increase in price of wheat is actually, not so good for Nigeria, given the fact that we import basically all our wheat into the country. So it means that we'll, have a higher cost of importation for wheat, and then the domestic prices of wheat and other wheat-related commodities would also increase, and this could also feed into food inflation and even inflation in general.
All right, so for domestic commodities now, we're seeing some movement. Tell me what's happening with tomato, yam, flour, and onions.
So basically, there is a mixed movement among the commodities. One of, would I say, the increase in some of the commodities is basically due to the fact that they are imported commodities, or maybe most of their derivatives are actually, imported. And then for the other aspect of it, we also see some of these commodities actually being influenced by seasonal factors. For example, the tomatoes, the yam, prices of tomatoes and yam actually have declined, and that is due to the fact that we are in the harvest, the season, we're in season of tomatoes and yam. So this is actually, driving downwards the prices of these commodities. And for other commodities that are imported into the country, we have the likes of flour. I mean, the prices have increased, and this is due to, the rising global prices of wheat and, other commodities that are being used to derive flour in the country.
All right, in the goodies part there, we see cocoa prices. They're up about 3.69%. How does this impact the Nigerian economy?
I mean, a 3.6% or a 3% actually is a good thing for Nigeria, considering the fact that we actually export cocoa. I mean, it's one of our major agricultural export commodity. So the increase in price, first and foremost, is being driven by supply concerns for major producers like Ivory Coast, Ghana. So there is this blackboard disease that is actually affecting, cocoa production as well as the supply of the commodity. And that is driving the prices up. So, I mean, when prices are increasing, it means there will be, increase in export earnings from cocoa, as well as the farmers that produce cocoa here in Nigeria. We can see increase in the income of the farmers.
All right, let's look at the currency market now. We're definitely looking for more dollars, and with cocoa prices going up, that means more dollars. But we're seeing volatility there. We're seeing a gain in the official window by 4.96%, but the parallel market still looks quite pressured. What are you seeing?
I mean, parallel market rates has crossed the 1,000 naira per dollar benchmark, and there are a whole lot of factors that contributed to that. One of which is the inflow of dollars, and that is due to the fact that we still have limited foreign exchange earnings from our foreign investment. Foreign investors are basically skeptical, considering the uncertainties that are currently pervading the macroeconomic environment here in Nigeria. So there is like some sort of holdback on investment into Nigeria, and that is affecting the foreign inflows into the country. And when there is a decline in when the forex inflows into the country, it limits the ability of the CBN to defend the naira, and that is why we are seeing that the naira has continued to crash, below 1,000, above $1,000, and that 1,000 naira per dollars. And I mean that is actually a bad one, because this could actually fuel inflation in the coming months. I mean, inflation numbers will be released next month, and we are likely to see the impact of naira play out into the inflation numbers. And don't forget that there are still energy prices that are rising. Also, we recently heard that I mean, the tax on the VAT on diesel prices have been removed, but we are unlikely to see a major difference in the price. Diesel, as at today, diesel was still sold above 1,000 naira per liter, and that is because we still have global oil prices still rising, so we would not see basically that impact in the price of diesel.
Right, as oil prices stay elevated in the global market, definitely still pressure at the pumps. Thank you so much, Victoria Momo, analyst, Financial Derivatives Company.
Thank you for having me, Marty.
I'll take a quick moment.